Ladies and gentlemen, what I'm about to tell you is going to fundamentally change how you think about cryptocurrency. It is going to change how you think about global power. It is going to change how you think about the intersection of technology and warfare. Because what just happened is not a minor development. It is not a footnote in the history of digital assets. It is a seismic, paradigm-shifting moment that will have consequences rippling across geopolitics, financial markets, and regulatory frameworks for decades to come. Iran just weaponized cryptocurrency. Literally. The Ministry of Defense Export Center of Iran, an entity known as Mindex, has officially announced that it will accept cryptocurrency as payment for advanced military equipment. We are not talking about small arms. We are not talking about ammunition. We are talking about ballistic missiles. We are talking about the Emad series, which can reach targets over 1,000 kilometers away. We are talking about Shahed drones, the same drones that have been deployed in active conflict zones across the Middle East. We are talking about Shahid Soleimani-class warships. We are talking about short-range air defense systems, anti-ship cruise missiles, and an entire arsenal of military hardware that is now available for purchase using Bitcoin and USDT. This is the first time in human history that a nation-state has openly acknowledged that it will accept cryptocurrency for weapons of war. Let that sink in. The first time ever. A sovereign government has looked at the global financial system, looked at the sanctions designed to restrict its access to traditional banking, and said, "We do not need your permission. We do not need your SWIFT network. We do not need your approval. We have cryptocurrency. And with cryptocurrency, we can sell our weapons to whoever we want, whenever we want, however we want." This is not speculation. This is not rumor. This is confirmed by official documents on the Mindex website. The Financial Times has verified the details. The payment options are listed explicitly in the FAQ section of the Iranian Defense Export Portal. Cryptocurrency, barter arrangements, Iranian rials. Those are your options. And the website itself is designed like an Amazon marketplace for military hardware. You can browse tanks, you can browse missiles, you can browse drones, and you can pay in crypto. The implications of this are so vast, so profound, so far-reaching, that I am genuinely unsure if the mainstream media understands what they are reporting. They are treating this like a curiosity, like a footnote, like an interesting development in the ongoing saga of sanctions evasion. But this is not a footnote. This is a turning point. This is the moment when cryptocurrency stopped being purely a financial instrument and became a tool of geopolitical power. Let me break down exactly what is happening and why it matters so much. Iran has been under crushing economic sanctions for years. The United States and its allies have systematically cut Iran off from the global financial system. SWIFT access has been restricted. Banks that do business with Iran face penalties. The Office of Foreign Assets Control, OFAC, monitors transactions and freezes assets connected to sanctioned entities. The Iranian rial has lost approximately 50% of its value. The economy is strangled. The people are suffering. Protests have erupted. Inflation is soaring. But the military-industrial complex of Iran has not stopped. The defense industry has continued to develop advanced weapons. And now they have found a way to monetize those weapons that bypasses every single restriction the West has put in place. Cryptocurrency does not care about sanctions. Bitcoin does not ask for permission. USDT does not route through SWIFT. When you send a crypto payment, it moves from one wallet to another across a decentralized network that no government controls. The transaction is recorded on a public blockchain, yes, but the identity behind the wallet is not inherently visible. And with the right operational security, with the right intermediaries, with the right privacy-enhancing tools, those transactions become extraordinarily difficult to trace, block, or freeze. Iran has known this for years. They have been using cryptocurrency to navigate trade restrictions quietly under the radar, away from the headlines. But what just happened is fundamentally different. They are not hiding anymore. They are advertising. They are putting it on their official government website. They are saying to the world, "We accept crypto for missiles. Come and buy." This is a direct challenge to the entire sanctions framework that the United States and its allies have built over decades. It is a middle finger to OFAC. It is a statement that says, your financial weapons do not work anymore. We have found the escape hatch, and we are walking through it in broad daylight. Now let me tell you about the buyers, because the buyers are the part of this story that should terrify everyone paying attention. Mindex claims to maintain relationships with clients in 35 countries. They do not disclose which countries. They do not name the governments or entities involved. But think about what that means. 35 countries are potentially in the market for Iranian ballistic missiles, drones, and warships. 35 countries that are willing to work with a sanctioned regime to acquire weapons that could be used in active conflicts. And now those countries have a payment option that is nearly impossible to block. They do not need to wire money through correspondent banks that might flag the transaction. They do not need to worry about their payment being frozen in transit. They just need a crypto wallet and the willingness to make the purchase. The website even addresses delivery concerns. It explicitly states that due to Iran's history of sidestepping sanctions, the delivery of these products is almost guaranteed to happen. They are bragging about their ability to evade restrictions. They are assuring buyers that the goods will arrive as soon as possible after the contract is processed. And there is one more detail that is chilling in its implications. Mindex requires buyers to make specific commitments regarding the use of the purchased products during a war with another country. Read that again. They are not selling these weapons for parades. They are not selling them for display. They are selling them with the explicit understanding that they will be used in armed conflict. And they want assurances about how they will be used. This is arms dealing at the nation-state level, facilitated by cryptocurrency, conducted openly on the internet, in defiance of international sanctions and United Nations Security Council resolutions. Now, let me tell you what this means for the crypto market, because the regulatory response to this development could reshape the entire industry. The moment that governments can draw a direct line from cryptocurrency to weapons proliferation, the political pressure to crack down intensifies exponentially. This is no longer about tax evasion. This is no longer about money laundering at the margins. This is about ballistic missiles being sold for Bitcoin. This is about Shahed drones being purchased with USDT. This is the nightmare scenario that crypto critics have been warning about for years, and it just became reality. OFAC is going to respond. They have to respond. They cannot allow this to stand without action. Expect to see wallet addresses associated with Mindex and Iranian defense entities added to the sanctions list. Expect to see enforcement actions against any intermediaries, exchanges, or OTC desks that facilitated these transactions. Expect to see pressure on centralized exchanges worldwide to strengthen their geofencing, to enhance their KYC procedures, to block transactions connected to sanctioned jurisdictions. The Treasury Department has already been expanding its crypto sanctions capabilities. They have been hiring blockchain analysts. They have been building tools to trace transactions across networks. They have been coordinating with international partners. This development is going to accelerate all of that. And it is not just the United States. European regulators are going to use this as ammunition. The Markets in Crypto Assets Regulation, MICA, is already the most comprehensive crypto regulatory framework in the world. Incidents like this give regulators the justification to push for even tighter controls. Every time someone in Brussels questions whether crypto oversight is sufficient, they will point to Iranian missiles being sold for Bitcoin. The Financial Action Task Force, FATF, the global standard setter for anti-money laundering controls, is going to update its guidance. They're going to focus on virtual assets and high-risk use cases. They are going to pressure member countries to implement stricter controls on crypto exchanges and service providers. The travel rule, which requires exchanges to share customer information for transactions above certain thresholds, is going to be enforced more aggressively. But here is the paradox that the regulators are going to struggle with. The very features that make cryptocurrency attractive to Iran are the features that make it innovative and valuable. Permissionless transactions, borderless transfers, resistance to censorship. These are not bugs, these are features. And they cannot be eliminated without fundamentally changing what cryptocurrency is. You can sanction wallet addresses, but new wallets can be created in seconds. You can pressure centralized exchanges, but decentralized exchanges do not have a compliance department to pressure. You can trace transactions on public blockchains, but privacy-preserving technologies, mixers, chain hopping, and sophisticated laundering techniques can obscure the trail. The cat and mouse game between regulators and those seeking to evade restrictions is about to intensify dramatically. The crypto industry is going to be caught in the crossfire. Now let me talk about the broader geopolitical implications, because this is not just about Iran. This is about the future of financial warfare. For decades, the United States has used its control over the global financial system as a weapon. The dollar's reserve currency status, combined with control over SWIFT and the correspondent banking network, has given Washington extraordinary leverage over adversaries. Sanctions have been the tool of choice for applying pressure without military action. They have been used against Russia, against North Korea, against Venezuela, against Iran. But cryptocurrency represents an existential threat to that leverage. If sanctioned nations can conduct international trade using decentralized digital currencies, the sanctions regime loses its teeth. If weapons can be sold and paid for outside the traditional financial system, the entire architecture of economic coercion begins to crumble. Iran is the first to go public with this capability. But they will not be the last. Other sanctioned states are watching. North Korea has already been accused of using cryptocurrency to fund its weapons programs. Russia has been exploring alternatives to the dollar-dominated system. Venezuela has experimented with a state-backed cryptocurrency. What Iran just did is proof of concept. It is a demonstration that a nation under maximum economic pressure can still conduct strategic trade using crypto. It is a signal to every other sanctioned regime that there is a way out. There is an escape. There's a technology that the West cannot fully control, and this creates a dangerous dynamic. As more adversarial states adopt cryptocurrency for sanctions evasion, the pressure on Western governments to crack down on crypto increases. But cracking down too hard risks pushing legitimate innovation offshore, driving the industry to friendlier jurisdictions, and ultimately losing control of the technology entirely. We are entering a new phase in the relationship between cryptocurrency and state power. The technology that was created to liberate individuals from government control is now being used by governments themselves to escape the control of other governments. The idealistic vision of Bitcoin as a tool for financial freedom is colliding with the brutal reality of geopolitics. So what does this mean for you as a crypto investor, as a holder, as someone who believes in the potential of this technology? It means volatility is coming. Regulatory crackdowns will create uncertainty. News cycles will be dominated by stories connecting crypto to weapons and terrorism and rogue states. The narrative war is about to intensify. But it also means that the fundamental thesis of cryptocurrency, that it represents a monetary system outside the control of any single government, has just been validated in the most dramatic way possible. A nation under crushing sanctions is using crypto to conduct international arms sales. That is not a failure of the technology. That is proof that the technology works exactly as designed. The question is not whether cryptocurrency is powerful. Iran just proved that it is. The question is how that power will be used, how it will be regulated, and what kind of world we want to live in. The missiles are for sale, the drones are for sale, the warships are for sale, and payment is accepted in Bitcoin. Welcome to the new era of crypto-powered geopolitics. Nothing will ever be the same. Stay informed, stay positioned, and understand that the world just changed. I will see you on the other side.